Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Minute for June 15, 2021. We have a couple things we want to discuss here today as we look forward to this week in the markets. The big event in the markets this week will be the Federal Reserve meeting. It's a two-day meeting. Today, Tuesday, and tomorrow, Wednesday, is the conclusion. There will be a press conference 2:30 p.m. on Wednesday with the summary of that meeting and some finer points from Fed policy by Chair Jerome Powell. There's been a lot of talk about if the Fed would shift course from their very accommodative monetary policy stance, right? When we say accommodative, we mean lots of stimulus and low interest rates. And the one thing that would put pressure on the Fed to raise interest rates ahead of schedule would be inflation. Now, we've had a couple reports over the last couple months that have hinted to some near-term inflationary pressures. Recently, we've seen that narrative start to cool off a little bit. So it puts the Fed in a very interesting place. Do they look at some of the previous month's reports and read into that as a reason to move ahead or move forward their timeline for hiking interest rates, or do they stand pat and hold their base case? So we saw last week the consumer price index was a little bit high again for the third consecutive month, which would hint that inflation is a problem. But today we saw retail sales data come out before the market opened, and that data has cooled a little bit. It shows that consumers are still spending plenty of money, but they're shifting their money more towards services and away from goods, which would be counter to inflationary pressures. So you see we have an interesting dichotomy in the markets here and how the market may be thinking about inflation. All in all, there is usually a lot of headline risk going into these Fed meetings where a lot of market participants try to anticipate what's going to be said. But at the end of the day, we don't think it'll be a major event. We think the Fed will stand pat on their policy stance, continue to be accommodative, continue to forecast 0% interest rates into 2022. So those are the big things to watch for this week. As far as the general market structure, markets down a little bit today, taking a breather after a nice run over the last couple weeks. As we've been talking about pretty much ad nauseum, we wanted to see the tech sector, the NASDAQ that is, resume market leadership. We've gotten exactly what we wanted to this point. We think the best rallies are based in growth and tech, and to see the rotation back into that part of the market gives us really optimism that this rally has some legs to run into the summer. So if you have any questions, please reach out to us. We didn't get the Heritage Market Pulse out last week. I just took a couple days off with the family, but we are back, and we'll be back later this week on Friday with the Heritage Market Pulse. Have a nice day, and we'll see you later this week.